The same market that created equal highs also created what? Lower highs, also created higher high. That tells you that nothing is actually perfect. So when God created everybody differently, it's not a mistake. So the market printed different price pattern. But does that change the name of this guy from head and inverse head and shoulder? No. It's still inverse head and shoulder. This is still what? Inverse head and shoulder. This you are looking at is inverse head and shoulder. So no matter what, we should understand that we may not see them come very pure and clean as we look at them in textbook. That's why I'm even glad that I'm using this to show you. I'm showing you directly from what the chart is saying. So quickly, I'm going to remove this. Let's look for real life market scenario. Let's look out for them. Let's look out for them. Come in. We've seen one. I will let you find the other one. I'll let you find if the market is this euro card. Too many. Okay. Are you seeing anything here?
Can you zoom out a little, please?
Oh.
Okay.
Can you see anything?
So are you talking about the inverse?
Yes, no, anyone. Inverse or not inverse? Are you seeing anyone?
Yeah, I'm seeing W.
W, okay, show me where.
You just move it away.
Okay, like this.
Yes, I'm seeing W 1, 2, 3, 4. Yeah. You said W might not be straight, might not be equal edge.
Yes.
Might be higher, lower. Listen, yeah. So I've seen one.
Okay. Are you talking about this?
Yes, sir.
This one? No, this is not a W. This is not a W.
From
this
here.
Is not.
From where?
This one?
Yeah, from that. Yes, from there.
No, this is not. You know why it's not? You know why it's not? When you want to write a W, your W can never be like this. Do you get? Your neckline should not be higher
than
your
the
impulsive movement. Yeah. So when your impulsive movement starts from, your neckline should be below it. So this is where we talk about different types of W, about different types of W, about different types of W. Do you get that, sir?
Yeah.
Okay. That's a nice try. That's a nice try. All right. So let's look out for some of the other guys. As I said, inverse head and shoulder. Yes, inverse head and shoulder is here. You did not see that. Inverse head and shoulder. Sorry, head and shoulder itself. Head and shoulder. We. Isn't it? We.
Is that head and shoulder M?
No, it's head and shoulder. It's head and shoulder.
Okay.
In fact, I think it shows multiple one. Okay, you've seen it. You see how it climbs to this level, to this level. All of this range is the same. Now, the most important thing is it dropped. It dropped back to where this level is. Can you see the market? When you look at it from some perspective, let me show you one secret. When market creates something like this, no matter what is happening around here, see, everything from this price level back to this price level, market is looking for the perfect time to take back everything. Most of the times, this is what happens in the market. Let me show you. Let me prove that to you. It started the impulsive movement from here to here, back and forth, came here, now created this reversal, isn't it? Created this level. So this level, we have them as our what? As our shoulders. And this is our what? This is our head, isn't it? Now, regardless of how long we have this ranging market, it's still a shoulder. Everything that happened there is an elongated form. Everything that happened here is an elongated form of what happened here. This is a movement. This is a shoulder, isn't it? It's still within the same price range, but this happened on a longer time frame. This happened within a shorter time frame. So what happened next? From this movement to this level, the market was buying. That's the long story to cut it short, isn't it? From here to
Yes, sir.
here, the market was buying. Now let's go to the opposite side. From here to here. What did you see the market doing?
Selling.
Aha!
Selling.
Now we are talking. Do you get this?
Mm.
This is how the market moves every time. Market is moving a cycle. I'm coming. I want to show you something. It's moving a different cycle. And until this cycle is complete, it's not going anywhere. It will only take time, just like this, to range until it gets what it's looking for. Look at this. All the back and forth, this has been created. Back and forth, this has been created. From where it started this impulsive move from, it went back there. So this is how the market moves, basically. So there's a level when we get to the advanced class. We're going to talk about internal market, or what's it called? Internal market range. Internal market range. So internal range liquidity, sorry. Internal range liquidity, it could be on higher time frame, it could be on lower time frame. So the idea of internal range liquidity is to enable you to know how the market moves in different cycles. I'm going to talk about that in advanced class. I don't want to bore you with all of that story, but as much as I kept this simple, I hope you understand this perfectly, sir.
Yeah, I understand this perfectly. If I go alone, if I go through it, I understand it again. So it's
Good.
simple to the barest minimum.
Thank you very much. That's just what I want to say. Because the market shows this every time. The only reason people do not get it is because they cannot see it. The moment you can see it, you become the master of it. And how will you become a master in doing this? Is by actively checking this out. Trust me, just coming to your chart every day to spend 30 minutes looking at the chart, you're going to gain a lot of insightful instinct from the market. I'm telling you, we've talked about information a few minutes ago, isn't it? Now let me show you. This is information. This is information. Came back here, did this. Now came down, isn't it? When it came down to this level, let me broaden this out a little. Let me broaden it. Now look at this. It went from here. It went from here. It came here, isn't it? Went to this level.
Yeah.
It came down. Now don't forget, this was the lower price range as at that time, right? This was the lower price range as at that time. I'm going to remove this. So I want you to see clearly. See, this was the lower time range. Look at this. This is what it created as what? As a neckline. Look at what the market did. It went through this level, came back for a retest, a retracement. After it has retested this same level, what happened? It broke through it. The message is the same. Trust me, the message only did this, came and break this level, went back to test it, and started selling off from there. Haven't we said that before? We've said that before, Nabi. Exactly.
Yes, sir.
So this is information. And where I was talking about different views in the market is based on what you see. The decision you take will be based on the information that you have. If all you know is double top formation pattern, what we've done now is what you would have done. If you know better than just double top formation, do you know that this is also a head and shoulder pattern? Do you believe that? Let me show you. This is something, right? This is something here. This is something, isn't it? This is something here too. And what happened next? All of this movement is a downward movement, isn't it? Hello, can you hear me?
Yeah, I can hear you. You went up for a while, so.
Okay, I think it was network. I said, can you see what happened there? Can you see this level?
Yes,
Can you see what the price has
bullish.
done?
Yeah, it's going up.
It's going up. Okay, so let's go with the story. It went up this way.
Yes, sir.
A bullish market, isn't it?
Yes,
It
sir.
ranged to the upward direction in this
Yes,
way.
sir.
Now it's moved from here to here as a bullish market, of course. Can you see that? Now within
Started
this,
selling.
yeah, exactly within this range, it ranged a little, but everything that happened from here to here was a sell market, isn't it? So what have we gotten here?
Yeah.
We've only gotten something like this. Truth be told. Now let's do that properly. What is this? What pattern is this?
Shoulder and head.
Thank you, head and shoulder. You're still correct. You can call it shoulder and head, whatever it is. So long you can remember it and you remember what you will do with it, I'm fine. It is fine. I tell a lot of people that what name we call these things doesn't really matter sometimes. They are only useful when you are amidst those that know better than you or when you want to communicate with fellow traders. Between you and your chart, if you call this thing Paul and Silas, well, it's left to you. So long you understand what you do with this Paul and Silas, you are good. That's the major truth. So whether it is head and shoulder and the head, it's fine. But in a corporate trading community, it's known as head and shoulder. So if you will remember it faster with shoulder and head, it's fine. So whatever
No
thing
problem,
we've
sir.
discussed, you can give it your own terminology for your own retentive retention sake, so to say. Anything that will make it stay in your memory, give it a name and let's go. So that's how I came about stop loss. I came about stop my loss before I developed high blood pressure. Stop my loss before I had, before I
Mm.
have a BP. So I say all of those things in class just to make sure that you can relate. So you can go with
Yeah.
any name that is fine by you. So
Okay, sir.
definitely what we've done here is quite simple. This is head and shoulder pattern. Everything we've done is about head and shoulder pattern. That's it. Okay. So we've done the reversal patterns in the market. You've seen inverse head and shoulder. Inverse head and shoulder tells you to buy, isn't it? Look at this one. Look at this W. Okay, what are the secrets? Do you know that when you are a little bit confused about what pattern you're looking at on the chart, there is a way to go around it. I told you you can see the chart in different forms. In form of bar charts, candlesticks, line charts. You can use a line chart to figure out a few things. Put up your line chart.
Mm.
This is a line chart
Wow.
here.
Wow.
That guy that was looking as if it wasn't that we only want to manage it as a head and shoulder. Look at it here. It's very, very clear here that this is head and shoulder. I've once showed you that we can see M formation in it. I think that was the first thing I showed you, isn't it? This was the M formation in it. Do you remember I mentioned that? This was
That's
the
M.
M formation in it. Look at it.
Yeah.
This was the M formation in it.
Mm.
Then and I'm prodded in that. Do you know that we can even find head and shoulder pattern in this level? This is it here. So which means the abundance of the information you have will determine how much you're going to make in the market. That's the truth. So this is it here. So
Mm.
always look out for your candlesticks, look out for your line charts when you want to determine or you want to identify different price pattern. This was looking somehow like a W or not. Just click on this guy. This is it here. If this looks more like a W to you, you'll be fine with this. If it doesn't, then you move on. Does it look like it has double bottom? Yes, it does. One, two. Does it look like it has impulsive down movement? Yes, it does. This is it, yeah. Does it look like it has what's it called? Neckline? Yes, it does. This is it, yeah. This is the neckline. Now, what happened? You wait for the market to create something like this to move, and whenever it's coming back, wait for it to come to the neckline before you do your next buy. This is it here. But when you look at this chart on its own, it's looking as if it's nothing you can go home with. Look at this structure. I could tell because I could identify this. That's why I could tell. Do you get it, sir?
Yeah, I got it, sir.
Okay. Okay. So on different price level, you have different market structure. Look at this. This is another information pattern. If we go on and on, you will see this entire today, just like this. Can you see? It has broken through
Mm.
this level. All of this level here has been broken right here. What did market do? It went back to retest Market went back to retest before it did what? Before it sold off. So that still tells you that everything they do, all of this are just noise. Do this, na noise. Most important thing to the market is everything where I buy go here, I must collect them back. This is the end of the story. So it comes, they do this, they do that, forget it. So long, this is where the impulsive movement started from. The market is only looking forward to do what? To go back there. That's the meaning. That's just the
Okay, sir.
meaning. This is clear, right?
Yeah, it's clear. It's clear.
Okay, very good. So let's check out. We have some other formation in the market that they are continuation patterns. Continuation patterns. Continuation patterns means the market has been going in a particular direction for before now, and all of a sudden it continued going in that same direction. What do I mean? The market has been buying. The market has been buying, and all of a sudden it created something just to tell you that this buy will continue. I hope you can hear me, sir.
I can hear you.
Okay, just to ensure that you understand that this market is about to continue. The market has been selling, it printed something, and the next thing is the market started selling. Now, no, it's been selling before. Yes, that's the continuation pattern. A formation that represents a continuity in the existing trend of this market. That's all we're talking about. That's everything we're talking about. So, quickly, let's check out some of them. We have, okay, I think you permit me to use Google right here so it can be faster. Okay, is that fine?
Okay, no problem, sir.
All right. So I want to ensure that I'm not repeating words and I'm not repeating what I've done. Okay, now look at this. We have different types. We have triangles. When we talk about triangles, we have three types of triangles. We have a regular triangle in the market. We have symmetrical triangle. Okay, let me just show them. That symmetrical triangle. Symmetrical triangle. This is how it looks like. A symmetrical triangle looks just like this, where you have a level of equal highs and equal lows in gradients. Look at this. The market is coming back and forth, back and forth, back and forth, like 5 highs, 5 lows, like this when you count. This is a symmetrical triangle. What do I mean? This moves in a particular equal level. Can you see the what's angle? Can you see the angle, the declination angle of this? Can you see the inclination angle of this? It's almost equal. You cannot compare that to this. I hope you get it.
Yeah.
You cannot compare that with it. So this particular one is called symmetrical triangle. This is called symmetrical triangle. Anytime the market forms this in a buying market, it's simply telling you that the market is about to continue buying. Anytime the market shows this in buying market, it tells you the market is likely to continue buying. Why? This is a symmetrical triangle. The market moved to this level, it was pushed down. It moved back to this level without getting to this previous level, the previous side. It was moved down. Now, ordinarily, you would be expecting the market to come to this low, isn't it? This is what is happening to Nigeria Naira somehow. I hope you know. When it's 1,000, you know what I mean? From 1,000, it went to 1,800, for example. It came back to 1,300. From 1,300, it went back to 1,005. A bit from there, it came down to like 1,200. It's not coming back to 1,300, right? It came back, sorry, it came back to like 1,400. It's not coming back to 1,300. It came back to like 1,400. Now, this time around, it's going, instead of getting to the 1,005, it was stopped around 1,450. From 1,450, you pushed it down, it came back, not coming back to 1,003 or 1,004, but it's coming back to around 1,420. You see, the price is getting choked because it's not getting to the higher price, it's not getting to the lower price. So somehow the market is going to get choked around a price level that something has to be done. And that's exactly what is happening now. All of a sudden, you've seen the naira just losing all of a sudden, like boom. You see $1 now from 1.3 or 1.2 something up to 1.5, 1.535, 1.550, and all of that. This is exactly what is happening. So this is a pattern. So this is a symmetrical triangle. It is a sign for continuation of buy. Okay. All
Yes,
right.
sir.
So apart from symmetrical triangle, we have ascending triangle. Ascending triangle happens at a price level like this. Come in, let me get one for you. Ascending triangle is a bit different from symmetrical triangle. Ascending triangle will be showing you a constant resistance zone. This is it here. It will maintain a particular price level, like price is 1008. So Naira was on 1.5. It came back, it got to 1.8. It dropped again. It dropped to what? To 1550. It went back up to 1008. It dropped again. It dropped to 1700. It went back to 1008. You see that the 1008 has been maintaining itself, isn't it? Isn't it?
Mhm.
Good. But what can you tell? Logically, what can you tell? It simply means these guys are not allowing Naira to come back to any price lower than where it left it. So it means that one day they will just push Naira to 1,800 and they will break that high. They will break it up to the level like 2,000, 2,000 to 2,003, 2,005. That is the meaning. Do you see that now? So this
Yeah.
is called an ascending triangle. Ascending triangle is when there is a buy opportunity in the market, and ascending triangle is a price pattern telling you that the momentum for the buyers is quite much. So definitely they're going to break this resistance zone. Breaking a resistance zone means they will break above this resistance level. If this is naira to dollar, this is around 1,008. They're going to break it, breaking it to 2,000 and thereabout. That's how it works. Do you get that, chap?
I got it.
Okay, fine. So we have another one, another triangle. We call that descending triangle. Descending triangle in forex markets represents the opposite of an ascending triangle. A descending triangle is when you have a maintained level of support price in the market and the price is pushing lower, creating lower highs, lower highs, lower highs. So from 1,000, so imagine now, Naira just got very strong all of a sudden. So $1 to 1 Naira is now 1,000 Naira. Okay. And every time the market now goes, market dollar is 1,007. When it drops back, it drops down to 1,000. It moves back up to 1,005. When it's coming down, it comes back to 1,000. I think this is actually the level we have. Do you get it, sir? We are now using 1,000 naira is now looking like our threshold when you compare dollar to naira, isn't it?
Yeah.
It's more or less like whenever it gets to 1,000, 1,002, it will look forward to buy, isn't it? So this
Yeah.
is a descending triangle. In a sell trend, when you have this opportunity, it's simply telling you to keep selling because this support level will be choked out. It means there is a high momentum from the sellers. That's why they are pushing. And each time you push it back up, it doesn't really go back to the previous high level, meaning there is much strength. You don't have to push them to this price level. No, they are too stronger than that. So that's why they stopped here. They came and test you again. You maintained your level. When you push them, they did not go to the previous high. They maintain a lower level. So it's more or less like you bounce out a guy from the gate. The guy landed at the fence. He came back to the gate. You threw him out. He did not get to the fence before he stopped. He came back to your gate. You threw him out. He didn't get to outside of your veranda. This time around, he came back to your gate. One time we just beat up your bouncer and we get inside the house. This is how this looks like. Do you get the logic, sir?
Yeah, I got it.
Oh, right, fine, fine. That is very good. That's very good. So that aside, we have another one. We have another one. We call it flag. Flag. Flag formation. Flag looks just like flag. So it could be bullish flag or it could be bearish flag. What is a bullish flag? A bullish flag is when you have a bullish market and you have a series of down ranging trade. This is an example. Market is trending down. This is a ranging market, but it's coming down as it's trending, isn't it? The next thing you will see is that the bulls in the market are going to break the previous high level. Why do we call this a flag? It maintains equal high and equal low, almost equal highs and equal lows in some cases. It's going to break the high level, retest it, and continue to buy. It's going to
But
do something like
also looks like
that.
W.
It
Also
also
looks
look like
like
what?
W. W.
Exactly from the diagonal part, Abby. Thank you. From the diagonal part, it also looks like what? W. So that's what really matters. So at the end of the day, even if you don't know their name, just understand the function. I trust me, understand the function. You said it looks like W? Yes, because all that matters is this. The moment it breaks through here, retest, it continue buying. It's still the same thing. Retest, continue buying. That's what we're looking for. So whether you know this name or not, you know what you're expecting, that it is a buy. Is that clear, sir?
Yeah.
Okay. Quickly, there is a guy I don't want to forget. There is a guy I don't want to forget. It's called Penance. Penance. Penance looks just like symmetrical triangle, but it is not actually. I'm looking for a good pennant here. This is how it looks like. You know why I'm showing you the perfect one? When you identify the perfect one, when you see the one that is not perfect on your chart, you would be able to tell. Do you get me, sir?
Yeah, I guess so.
Just like we talked about information. I showed you a perfect information, right? I told you that we still have some like this. So you will not be looking for when only M is perfect before you take an opportunity to trade. Now, this is a pennant. Pennant is also a continuation pattern. This market has been selling. Now, this happened and then pushed out. This is a pennant. Now, what should you look for? This is simple. In a symmetrical triangle, this is what you have. You've had plenty buy, sell, buy, sell, buy, sell, isn't it? That is a symmetrical triangle. In a pennant, you only have it few times, 1, 2 to 3 times. You are good to go. This is a pennant. So how do you identify that? The most important thing is to mark the highs and to mark the lows. Trust me, everything the market is doing in all of these guys is to mark the highs and to mark the lows. So this now will take you back to that your trend line tool. You should be able to use that your trend line to mark. So whether it is W or not, understand how to use this trend line so that when it breaks out, you know it is a buy. Whether it is M formation or not, understand how to use this tool so that when it does something like this, you know that it is a sell. Simple. So pennant is just a lower version of the symmetrical triangle. It also does the same thing, but it ranges lesser time. Are we clear, sir?
Yeah, I'm clear.
Okay. So which other one I've not talked about? I've talked about ascending. I've talked about descending. I've talked about the symmetrical triangle. I've talked about the bullish flag, the bearish flag. I've talked about the pennant. Which other one I've not talked about? I think those are the ones that are common. Those are the ones that are common in the market. So let's look for, let's check the chart and see some of them. Let's check the chart and see some of them. Let me go back to the chart. Okay. Now look at this. All I have to do, whether I know the name or not, all I have to do is to create something like this. Do you remember this? Do you remember this? This was maintaining equal low, the same level.
Equal high and equal low.
Equal highs and
sell.
for a sell, yes. This is lower highs and lower lows, telling you that this is definitely a sell market within this range. Now, normally, what we'll be expecting is the market to break above or below. If the market will break above this, we'll say this is a bullish flag. Why? Because this is a pole This is the market within the range forming flag. And if this break above and it retests, it continues buying. We'll say this is what? A bullish continuation pattern. Is that clear? We'll say
Yeah.
this is a bullish continuation pattern. But in this case, what happened? In this case, what happened? It
She
sold off.
bearish.
Thank you. So that is where trend direction is important in the market. Trend direction is important in the market. So I'm going to show other ones. Let me delete this guy. We still have like 8, 9 minutes. I'm going to show other ones. I want to see, okay, let me use, there's no time frame that is not possible. I just want to look out for a better time frame. Then there is a rectangle, that's good. I remember that there is a rectangle. A rectangle, a rectangle means the market is in a ranging level. A rectangle means the market is in a ranging level, something like this. Can you see? Something like that. I hope you can see this chart.
I can see it.
You can see it, right?
Yeah.
Okay. It means this market has been buying. Now it got to a level, it got stopped. Basically, we have no problem with that because we know this is our lowest level and this is our highest level. So that is how we got this rectangle. Okay. So what we'll be expecting is for the market to break below and retest and continue selling, or to break above, retest and continue selling. Now, this is our retest level. This is also our retest level, isn't it? Which direction did the
Yeah.
market break out through? Tell me.
Bullish. Bullish.
Thank you, bullish. It broke through like this, retested here, continue buying. So the moment the market breaks out, you are not buying. You will wait for it to do or to retest. If the market will retest well, look at this. This candlestick formation is called bullish engulfing candlestick, and this is a this is accumulation zone, meaning this is where you're expecting a buy market. This zone is where you're expecting a buy market. The moment this candle forms on this zone, it means we should look forward to buy. That's just it. The moment you saw these two candles, you'll be looking forward to buy. So what happened eventually? The market bought over 200 pips eventually.
So, Mr.
200
Yem,
pips.
what tools did you use?
To do what? To measure.
Yes, I saw that cross tools. I don't understand.
The
That plus
cross tool.
tools.
Okay, that is the crosshair. This is here. Your
Is
crosshair
it
to
yeah.
measure. You use it to measure. Right? Just left click and hold where you want to measure from. Left click and hold it. Then you drag. The moment you drag, the middle number becomes your number of pips. 2597 means 259 pips, 7 pipettes. Do you get it, sir?
50 what? I didn't see the
50.
amount of pips. Can you go again?
Okay, this is here. Okay, this is 2956, 2846. Can you see this?
Okay, wait first. Yeah.
284 pips, 6 pipettes.
Yes. Okay.
That's clear, right?
Yes, clear.
So we can use this to actually calculate the number of pips in the market. We can use that to
Okay.
calculate the number of pips in the market. Okay.
Okay. Another, yeah.
Go ahead. Ask a question.
Another tool I'm seeing here beside the zoom out. What tool is that?
This one.
No, not that one. The other one. The two. The other left. No. Yeah. That one. The other one.
This one.
No, the one with red, like a
Okay,
cross,
this
and the
guy.
other one. Yes. Yeah, these two
Okay.
guys. Yeah.
Okay, great. So that day when I was talking about them, I said, look at me. At some point, I cannot scroll. This is the current market price for today. I
Yeah.
could move back now. I could go backwards. Isn't it? Can you see the
Yeah.
date? 18th
Yeah, I can see
January,
the diff.
17th January. This on December, isn't it? It is possible for me not to be able to do this if this green guy is active. Do you get? Let me click on the green guy.
Yeah.
The green guy will lock my current position. So this is the current market price for today. As much as I try to go anywhere, what do you see? It comes back to the today's market, to the current market price. Can you see? As I'm
So you use
trying
the
to,
green.
but
Hmm.
I'm listening. I'm listening.
The green brings you back to the coin market price, right?
No, it doesn't allow me to move away from the current market price.
Okay, from the coin market price, even if you're bringing
Yes,
everything back.
exactly. So I have to click it one time so that I can move away and check the previous time in the market. So I can go on and check the last year price like this. So if I want to come back to the current market price, I will click on this red guy.
Okay.
This is the red guy here. I
Okay,
clicked
that's
on
the
it
coin
once.
market price.
Yes, this is the red guy.
That's
I clicked on it.
1.4 7 something.
Exactly 1.4799. Good. So I click on it once. If I click on it again, it will only fit my screen to my, it will fit my price to my screen. So clicking it back and forth is just to fit your price to your screen.
Okay, but the way your the coin price is,
Yes.
how do we know if it's going to be a bullish or it's going to be a bearish?
Okay,
Just
so
the way
that
it
will
is
not,
now.
okay, so that is why we will not do analysis. So we now do that analysis based on it depends on the type of analysis we're doing. Basically, what I do is I do a top-down analysis. I'll start from the monthly time frame. I'll look out how the market is behaving on the monthly time frame. I'm seeing a bearish movement here. I'm seeing a bullish movement here. I've seen a little bearish, and this ranging market here tells me that this month has been bullish for this market. So basically, the market has broken through these levels, all of these levels here. The market has broken through them. Now, what I'll be expecting is for this market to come to this price range. And that is around, let me calculate, that is around 357 pips. That is what I'm seeing in the market. So when the market takes out this high, if this high is taken out, it can retrace. But depending on the current market condition, as at the time it gets here, that can even still suggest to us to expect the market to come to this kind of level. Say that the market should still do what? To still come to this kind of level before we'll be anticipating a sell. Now, this is my analysis on monthly time frame, Euro card. You can write it somewhere. I'm going to look out for more opportunity and clarity on a lower time frame, like weekly time frame. I will check weekly time frame. I'm going to analyze based on what I'm seeing on weekly time frame as well. I will check the daily time frame. I'm going to analyze based on daily. So with that now, I will come out and say, okay, this is why I want to buy, or this is why I want to sell.
Yeah, maybe
Is
in
that
our
clear,
next
sir?
class we'll do that. No problem. Yeah.
Yes, no, we have not gotten to analysis yet. We are just trying
Okay,
to
no
figure
problem.
out those elements we will put together to make good analysis. We'll get to
All right, sir.
analysis surely.
Okay, sir. No problem, sir.
All right. Are we clear for today, sir?
Yeah, we are clear.
Okay. All right. So try and study
Okay.
up these ones. If you have questions, just drop it for me. I'm going to respond.
No problem, sir. Are
All
you
right, sir.
sending the recorded version?
Yes, I will. I will do that.
Oh, all right. Thank you, sir.
All right. You're welcome.
All right.
Have a
Thank you very
wonderful
much,
night,
sir.
sir. Yes,
And you
sir.
too, sir. All right, sir.
Yes, sir.